Thanks for watching Lessons in Minutes with Jaylee. Like, share, and don't forget to subscribe.
Today, we're going to look at the topic financial statements with a focus on income statement for a sole trader. And we're talking about a sole proprietor, which is the one-man ownership business. At the end of this lesson, you should be able to explain the purpose of financial statements and demonstrate how to prepare a sole trader income statement from a set of balances. But for this area, all we're doing in this lesson is generating gross profit. Now, I'll tell you about gross profit later on. Let us look at what are financial statements. These are formal reports that provide information about an organization's financial performance and position by presenting the financial data in a useful and meaningful way. These statements usually include income statements, and this shows the organization's revenues, expenses, and profits or losses over a period, over a specified period, which is basically the financial period that you're looking at. Another financial statement is balance sheet. And the balance sheet shows the organization's assets, liabilities, and equity, basically assets, liabilities, and capital. And we also have the statement of cash flows. And this shows the organization's inflows and outflows of cash and cash equivalent during a specified period. Let us look at income statement, which is also known as trading and profit and loss account. Now, in order for a business to determine the profit or loss for an accounting period, a trading firm will normally prepare a trading and profit and loss account for the period in question, and that is the financial period, that particular financial period. So remember, the trading firm, meaning the business that is being operated to make a profit. In preparing the account, two different profits are calculated. The gross profit, and this is calculated in the trading account, and the net profit, which is calculated in the profit and loss account. So basically, the trading and profit and loss account are two accounts in one. The trading account generates the gross profit, while the profit and loss account generates the net profit. Let us now look at the distinction between gross profit and net profit. Gross profit is calculated in the trading account as indicated earlier, and this represents the profit figure before expenses are deducted or accounted for. The net profit is generated after taking out your expenses, meaning after deducting your expenses. And if it is that the business makes a gross loss, because it can make a gross loss, it means that the cost of goods sold would be greater than its sales. And if it is that the business make a net loss, it simply means that it is coming out of a gross loss in order and coming down into a net loss, or the expenses are greater than the gross profit where profit was made. So remember, a net loss is where the expenses are greater than the gross profit if a profit was made, or if it is that the business is coming out of a gross loss, basically, it will be making a net loss as well. So once your expenses are greater than your revenues, then it will result in a net loss. Let us look at some terms that are associated with income statement. We have carriage, and carriage is basically the cost of transport. Carriage inwards, which is also known as carriage on purchases. It is a transportation cost that the business pay to get the goods into the business, and it is typically added to, it is always added to the cost of purchases, because guess what? It increases the cost in order to get the goods into the business. Carriage outwards is also known as carriage on sales, and it is the cost of delivering the goods sold to the customers, and this is shown in the profit and loss account. So basically saying that it is listed among your expenses. But bear in mind that carriage inwards is also an expense, but it increases the cost of purchasing the goods, getting the goods into the business, and therefore it is added to purchases. Returns inward, which is also known as sales returns, and this is where your customers return goods back to the business. It is usually deducted from sales in the trading account. Returns outwards, another term for that is return on purchases. Basically, the returns of goods by the firm to its suppliers. And guess what? it is deducted from the value of purchases in your trading account. And that is when you're actually generating your gross profit. Opening stock. Opening stock is your unsold goods at the beginning of a period. It is also known as opening inventory. Now, the opening stock, remember, unsold goods. And in mentioning unsold goods, it means that that is your closing stock. So closing stock is your unsold goods at the end of the period, while opening stock is your unsold goods at the beginning of the period. So basically, what was your closing stock at the end of the period, which was your unsold good, becomes your opening stock at the beginning of this period, the current period. Let's move into looking at calculating gross profit. And gross profit is simply sales less cost of goods sold. Cost of goods sold is also known as cost of sales. So remember, in generating your gross profit, the big picture is that it is sales less cost of goods sold. But there are some other things that you'll need to do. You have to do some calculations in order to get to that. But remember, the broad thing is gross profit is equal to sales less cost of goods sold. So let's take a deeper look at that. And we begin with sales, because remember, you're calculating gross profit and you start with sales. Sales, you'd pick up that. And if it is that you have returns inwards, that is going to adjust your actual sales figure. So you are to subtract that from sales, and then you get net sales. So bear that in mind. Now, having calculated your net sales, we move into subtracting our cost of goods sold from that to get your gross profit. So I'm breaking it down. So once you get net sales, it is net sales less cost of goods sold. And remember, net sales is a result of having returns inwards. So if there's no return inwards, there is no net sales. Net sales less cost of goods sold give you gross profit. But guess what? You have to calculate your cost of goods sold if it is that the figure is not presented to you like that. And in calculating your cost of goods sold, that is simply your opening stock plus your net purchases less closing stock, and that give you cost of goods sold. But bear in mind, people, that net purchases is a result of you adjusting the purchases figure based on the balances that are given. But if there's nothing that affects your purchases, it is simply opening stock, add purchases less your closing stock, and then that give you cost of goods sold. Now, how do we calculate net purchases? Net purchases is calculated when you have carriage inwards and return outwards, or even just one alone. You have to treat them. You have to treat them because those adjust your purchases figure. So if it is that there is carriage inwards in the list of balances that you receive, you have to add that carriage inwards to your purchases. And guess what? If there is returns outwards, you're going to subtract that from the value of your purchases, and then you're going to get net purchases. So remember, this action is taken if you have both of these, which are your carriage inwards and your return outwards, or if you have just one. Your carriage inwards is added because that is transportation cost to get the goods into the business, so that increases the value of purchases. So if you add that, we're subtracting this returns outwards, because guess what? You're returning some of the goods back to your suppliers. So therefore, the value of your purchases will decrease, and that would give you net purchases. Now, once you have your net purchases, people, you then add that to opening stock, less your closing stock, and that give you your cost of goods sold. And once you have your cost of goods sold, people, it means that you're able to generate your gross profit. And do remember that your gross profit is simply sales less cost of goods sold. So gross profit is sales minus cost of goods sold. We are now going to move into looking at a calculation using this question, which is taken from the Frankfurt Principles of Accounts text. And we're required to draw up J. Grant's trading account for the year ended 31st of December 2003. And we have some balances. We have carriage inwards, returns outwards, returns inwards, sales, purchases, inventory, and you're seeing two inventory figures. For these inventory figures, people, the figure that you're seeing at January 1st, 2003, because that is the earlier date, that is your opening stock, and the later date, or the date of the trial balance, once that stock figure is carrying that date, then it means that it is closing stock. So let us move into looking at preparing the trading account. And in preparing the trading account, you're going to realize that the concepts that we look at earlier in calculating the different figures will be coming out in that. So here we go. And in preparing the trading account, this is the vertical format, because that is what is required by CXC based on the syllabus. And if you look, you're seeing 4 columns. This column, which is the widest column, and that's the first column, is used to record your details. And actually, once you're going through, you would notice that you're carrying out a series of steps in preparing your financial statements. So you have to carry out that in a specific order to carry out the principle in preparing your income statement. The other 3 columns are your monetary columns. And guess what? This one to your far right is your main column. So when you start working, you will start by using this column to enter the amounts in doing your workings. Now, if it is that you need to do some calculation to get a figure to work with in the main column, you have to proceed to the middle monetary column. So this is the column next to the main one to the left. You'll do your workings there, and then you'll transfer the figure to the main column to proceed with your calculation. Now, if it is that you need to do some calculation to get a figure that you need to work with in the middle column, you have to use the first monetary column. Having calculated that figure, then you proceed to the middle column, do your workings, and then you send your final figure to the main column. But if you don't understand that, don't worry. All you have to do is to just focus on what I'll be doing in preparing the financial statement for J. Grant. Now, the first thing that you'll need to do, having drawn up your template, you would need to enter your title. And the title is simply the name of the owner or the name of the business. If you get both names, use the name of the business. If no name is given, do not make up any name. Just proceed to continue writing your title, which is what you're preparing. In this case, we're preparing the trading account, and that's for the year ended for the period that is given, and that is the 31st of December, 2003. The trading account, for instance, the trading account, you know that we're calculating up to gross profit, because remember, the purpose of the trading account is to ascertain your gross profit. So it means that we have to start with our sales. So we're going to go to the question to get that figure. And the sales figure is $38,442. So we're going to record that in our worksheet. And that's sales. And we're entering the amount in the main column. And that is $38,742. Going back to the question to see what details we have to work with. We have returns inwards. And because we have returns inwards, remember, that is subtracted from sales, and that is $890. So we're going to proceed to less our returns inwards, $890, and that gives us, once we subtract returns inwards from our sales, we get what is called net sales, and the amount is $37,852 that we have as our net sales. If you get a question and there is no return inwards, what you'll do is to proceed to lessen your cost of goods sold. But we have the return inwards, and we have adjusted for that. Our net sales is $37,842, remember. And once we have that, we can proceed to lessen our cost of sales. But in order to calculate cost of sales, we have to see what information we have in the question. And we have opening stock. And once you have opening stock, that's the first thing that you're going to record. And we're going to put this amount in the middle column because we're going to do our workings for our cost of sales. Now, having recorded our opening stock, we are then going to look what other information we have. Our next step is to actually add purchases. So let's move into checking to see what we have in terms of purchases. We have our purchases figure of $26,409. And in terms of that, we also have relating to our purchases carriage inwards, and our carriage inwards figure is $670. So we're seeing that we have to adjust our purchases. We also have returns outwards, and returns outwards is going to affect our purchases. So we have to adjust for that as well. So we have three figures working with as it relates to purchases. So we have to do our calculation for our net purchases because we have to adjust the purchases once we have carriage inwards and return outwards or any one. So our next step is to calculate net purchases. So we're going to pick up our purchases figure, which is $26,409, and we're going to record that. And we're going to use the first monetary column because we'll be adjusting our purchases figure. So we're going to work out what is our net purchases before we can use the middle column with the net purchases. Our next step, remember, there was carriage inwards, so we're going to add that. And the value for carriage inwards, again, is $670. So let's make a note of that. Having added the $670 to the $26,409, we have a total of $27,079. But guess what? Remember, we had return outwards, so we have to less our returns outwards. And the value for returns outwards is $475. This figure, we're going to record it now. And once we have that, we can then subtract this from the $27,079. And this now give us net purchases. Once we have a net purchases figure, we need it to add to our opening stock. So we're going to proceed to record that in the middle column. And then we are going to add this to the opening stock. And guess what? Once you add what you have purchased to your opening stock, it gives you the total of goods that you have available for sales. That is cost of goods available for sale. And that figure is $33,528. Now, once you have that, you can then proceed to less your closing stock. And our closing stock based on the question is $7,489. And we're going to record that in our worksheet and proceed to do our calculation. Now, based on our previous information given, once you subtract your closing stock from the cost of goods available for sale, having added your net purchases to your opening stock, it means that you have now successfully calculated your cost of sales. And your cost of sales figure is $26,039. So all of this that we were doing right here was for us to calculate our cost of sales. So all of this led to calculating our cost of sales figure. And remember, our cost of sales is $26,039. Now, once we have our cost of sales, which is also known as our cost of goods sold, we can then generate our gross profit. So our gross profit, people, is the net sales of $37,852 minus the cost of goods sold, which is the cost of sales of $26,039, give us a gross profit of $11,817. So basically, all we were doing is sales less cost of goods sold, and that give you gross profit. But remember, once you have returns inwards, you have to adjust your sales, and that give you net sales. Once you have your net sales, you proceed to calculate your cost of sales. And you carry out the concept in calculating that. And once you get that, you subtract it from your net sales to get your gross profit. And that takes us to the end of this lesson. In our next lesson, we look at calculating net profit.
Like, share, and don't forget to subscribe.